Welcome to the first episode of our podcast, Dissecting Insurance. And I am your host, Shubhajit Chandra. So, this is my first podcast experience, and just to give you a background of who I am working in a PSU general insurance company for the last 7 years, and I feel very passionate about insurance and how it helps people in the time of need. So, basically, you can also call me an insurance nerd who is fascinated by all aspects of insurance. I'm also someone who loves photography and filmmaking, and so combining my passion for content creation and insurance, I decided to start this podcast on insurance. Okay, in this podcast, in each episode, I'll be joined by an industry expert, and together we will talk about some selected aspects of an insurance contract. Now, insurance is a vast, complex, and technical field. So, with each episode, our target will be to simplify some concepts related to insurance and create a body of knowledge that will be helpful to both practitioners of insurance and also to clients and customers or any other interested parties. So, before I start, I would also like to clarify that this endeavor of mine is separate from my day job as an insurance professional. And before using any of the content shared in this podcast, please read the terms and conditions of your policy and take legal or professional help as you may require. Thank you. I hope you enjoy listening to our first episode. So, our first episode is Inherent Vice and Causation in Marine Insurance, and I am joined by someone who is considered as an asset of this industry, Mr. Basudev Sanyal sir. Basudev sir is the Deputy General Manager of a leading PSU general insurance company and is working in this industry since 1989. So that's almost 34 years of experience. Currently he is working in the corporate head office but also has experience of heading operating office. He has worked across multiple technical departments such as marine, health, miscellaneous and motor, and both as an underwriter and also as a claim settling authority. Basudev sir is a fellow of the Insurance Institute of India, and owing to his academic inclination, Basudev sir loves deep diving into various aspects of insurance. He has also authored multiple papers dealing with many complex subjects and concepts of insurance. These papers has been published in some leading insurance journals such as the Journal of Insurance Institute of India, Insurance Times and others. In fact, the idea of this podcast was inspired by him because he is always sharing with us something or the other from his vast experience and expertise. And I am personally fortunate and grateful that he encouraged me to do this and agreed to be the very first guest on this podcast. So with this, I take the pleasure of welcoming Basudev sir. Basudev sir, welcome to our podcast.
Thank you. It's indeed a pleasure to be on this podcast and share my views on issues of academic relevance in the field of insurance. This opportunity really makes me feel fulfilled as a professional in the insurance sector for nearly 3.5 decades.
Thank you, sir, and I hope our listeners also enjoy this episode and we get to learn a lot from you. So, as mentioned in the introduction, Basudev sir has authored quite a few very interesting articles, and recently I read one such very interesting article, and that too very a technically dense article. And while reading, it occurred to me that this very well can be the conversation starter for our podcast. So the article was titled Inherent Vice and Concurrent Causation in Marine Insurance, Issues and Judicial Trends, and was published in the very reputed Journal of Insurance Institute of India in their April-June 2021 edition. So my first question to Basudev sir will be, what was the inspiration, sir, or what was the context behind writing this article? If you can just elucidate us.
Well, the inspiration for this article actually came from a marine cargo claim, which I happened to come across in my professional sphere. Well, the claim had been recommended by the surveyor to be repudiated on the basis of the exclusion for inherent vice. But on a cursory look at the file, I felt that his conclusion was inherently flawed and with a lack of understanding of the issues involved. So for a better idea of the mysterious concept of inherent vice, I thought that a detailed study was required, and this effort or this detailed study led me towards writing an article which later on got published in the Insurance Institute Journal.
Oh, that's nice, sir. So basically, we can say that your actual day job pushed you towards this academic venture.
You can say that.
Okay. So, sir, now directly taking a cue from the title of your article, if you can explain us what is basically inherent vice and what its implication in insurance. Inherent vice is something I would say that we come across many times in our day-to-day course, but not many people understand it very much. So, if you can just give us a brief about what exactly it is.
Well, at the outset, let me make it clear that the inherent vice concept that I have talked about in my article and that we are going to discuss today is inherent vice as understood in the exclusion 4.4 of Institute Cargo Clauses, that is as applicable to marine cargo clauses or marine cargo insurance. I want to make this distinction because inherent vice is a concept which is also there in other branches of insurance, including marine hull and property insurances. So let us confine our discussion to inherent vice as applicable in marine cargo. Secondly, there will be a lot of discussion on the judicial concepts as framed by various decisions of the courts, mainly English courts, and these are very relevant to the concepts discussed herein because these judicial interpretations have actually determined how these concepts are actually understood by insurance professionals and by insureds on a day-to-day basis. So starting with this, one can say that the phrase inherent vice has no statutory definition either in the Marine Insurance Act or in the Institute Cargo Clauses. A widely quoted and widely accepted definition of inherent vice was given in the 1983 case of Soya versus White by Lord Diplock, who stated that inherent vice means, and I quote, the risk of deterioration of the goods shipped as a result of their natural behavior in the ordinary course of the contemplated voyage without the intervention of any fortuitous external accident or casualty. An alternate definition of inherent vice is also given by Arnold when he says that inherent vice is the loss or deterioration which arises solely from the principle of decay or corruption in the subject matter insured, not from external damage but entirely from internal decomposition.
Okay, so if I understood it correctly, sir, it is something that is being resulted from the inherent characteristics of the goods itself and not exactly from an external source.
Exactly.
And if I just may just have a follow-up question on this, sir. So like you mentioned, does this concept of inherent vice changes across different line of businesses?
Well, the concept of inherent vice, like the concept of wear and tear, is fundamentally the same across all lines of insurances. But it is the judicial interpretations that might differ from policy to policy. But again, I can say that it is the concept of inherent vice as embodied in marine insurance that is referred to in all judicial proceedings, even in other fields or branches of insurance. So it is the concept of inherent vice has really come from marine insurance and from the Marine Insurance Act, and has gone on to encompass other branches of insurance as well. We have to also remember that marine being the oldest branch of insurance, it generally provides the basis for the fundamentals of all other branches of insurance as well.
Okay, sir. And I think at the end of the day, insurance being a matter of contract, the judicial interpretations in different line of business has a significant role to play in that particular line of business also.
Yes, and it is the judicial interpretations that sometimes give a different meaning to a particular concept or a particular term, and it definitely shapes the way our policies and our exclusions are drafted and how they are meant to be implemented in the market.
So, like we discussed, sir, inherent vice is something that stems from the inherent characteristics of the goods itself. So, I think if we just imagine about a bit, that some kind of element of inevitability is attached to it, and we know that insurance policies are statutorily prohibited from covering inevitability. So, how you would respond to this, sir?
To explain this, I would look at the case of Prudential Insurance Company versus Commissioners of the Inland Revenue, decided in 1904, which said that one of the defining characteristics of an insurance contract is, and I quote, the event should be one which involves some amount of uncertainty. There must be either uncertainty whether the event will ever happen or not, or if the event is one which must happen at some time, there must be uncertainty as to the time at which it will happen, unquote. If we observe from this definition, it emerges that events which are inevitable but whose probability of occurrence is unknown and uncertain are definitely insurable. The most obvious example of an inevitable event we can see in our daily lives, that of natural death, and that is covered under life insurance. To argue this point further, we can look at the Marine Insurance Act and Section 55(1) and Section 55(2)(c) in particular. You can see Section 55(1) says that subject to the provisions of the Act, and unless the policy otherwise provides, the insurer is liable for any loss proximately caused by a peril insured against, but subject as aforesaid, he is not liable for any loss which is not proximately caused by a peril insured against. 55(2) again starts with, unless the policy otherwise provides, the insurer is not liable for ordinary wear and tear, ordinary leakage and breakage, inherent vice or nature of the subject matter insured. So in both these sections, the losses that are excluded are subject to unless the policy otherwise provides. So this term itself indicates that inherent vices are not statutorily excluded, or the exclusion for inherent vices in marine cargo policies are not a legal requirement, are not a statutory requirement. Basically, we can also in this respect draw reference to the case Soya versus White and the distinction drawn by Judge Donaldson L.J., in which he has rather expressed a preference for the term known certainty to the term inevitability. He stated that in practical terms, there is as much a risk if the inevitability of a loss is not known as if the loss itself may or may not occur. He expressed his opinion that even known certainties, such as ordinary loss in weight or volume, can be covered in a contract of indemnity, but would be improbable as a business proposition. Well, one may agree or may not agree to this aspect, as I feel that certainly covering losses which are certain to occur or known to be certain to occur would be perhaps against public policies. However, the conclusion can be drawn that there is no bar on covering inherent vice under law, but it is excluded in our policies historically as a matter of business prudence and not as a fundamental legal requirement.
Right, sir. So basically, you are saying that even though the loss is inevitable, the timing of it, the occurrence is not known prior hand, and that makes it fortuitous, and hence it can be insured.
Yes, but definitely inherent vice does contain an element of inevitability. We know that foodstuffs or fruits or perishables are going to certainly rot. So therefore, it is definitely not a matter of business prudence for any underwriter to cover such risks. But then, as we already discussed, the timing of the loss, the circumstances under which this inherent vice will operate are always going to be uncertain, and
Right.
therefore it is definitely an insurable risk, and we do cover it in certain policies. For instance, I can refer to institute cargo clauses, institute coal clauses, in which spontaneous combustion is one of the included covers. And as we all know, spontaneous combustion in coal is a form of inherent vice.
Right, sir.
So it is not that we do not cover inherent vices in our insurance policies.
Right, sir. So, in your article, you mentioned, sir, the term proximate cause in reference to the Marine Insurance Act. And we all know that proximate cause is probably the primary concept of determining causation and considered as the thumb rule. But frankly speaking, if I today Google proximate cause, I will get more than 1,000 explanations, and half of which will be contradicting each other. So, I would ask you, sir, if you can just clarify this, what exactly is the concept of proximate cause?
In insurance law, in order to pay any claim under a policy, the cause of loss is an important factor. In simple terms, if the cause of loss is an insured peril, the insurance policy is bound to respond. But if the loss is caused by an uninsured peril, then obviously the loss is not payable. This seems more simple, but in many cases, there are multiple causes operating at the same time to cause an event. Therefore, a definite rule of causation or a principle is needed to determine liability under an insurance policy. Causa proxima non remota spectatur is the fundamental maxim governing causation in insurance. It means simply that the proximate cause and not the remote cause needs to be looked into while determining indemnity under a policy. It can be observed that till the 19th century, it was held by the courts that proximate cause meant the last one in the time chain, or the one just nearest or immediate to the time of the loss. However, a fundamental change in the rule of proximate cause or in the application of proximate cause principle was brought about in 1918 by the landmark case of Leyland Shipping Company Limited versus Norwich Union Fire Society Limited, where a ship was torpedoed and was in the process of sinking. Almost immediately, there was a cyclonic storm and the ship sank. It was held in this case by the House of Lords that the proximate cause of the sinking of the ship was a torpedo, though the cyclone was nearer in time. It was significantly held in this case that proximate cause is not one which is proximate in time, but rather one which is proximate in efficiency. Of course, the classic definition of proximate cause had been already given earlier in 1908 in Posse and Company versus Scottish Union and National Insurance Company as the active efficient cause that sets in motion a train of events which brings about a result without the intervention of any force started and working actively from a new and independent source. What it implies is that to find the proximate cause, we have to closely observe the chain of events. If the first cause or the cause that is started first retains its identity and efficiency until it brings about a result, we may conclude that it is the proximate cause. If, however, the chain of causation is broken so that the first cause loses its efficiency and a new cause intervenes, bringing about the result actively and efficiently, in that case, we can conclude that the result has been brought about proximately by the new intervening cause. The case of Etherington and the Lancashire and Yorkshire Accident Company of 1909 may be referred to clarify this matter or this issue further. Well, it's a very famous case where the insured person suffered a riding accident, inflicting a shock to his system and involving him in a severe wetting, which ultimately resulted in him catching pneumonia and dying within a day or two. The proximate cause in this case was held to be the accident, which was covered, and not natural causes or natural death, that is the pneumonia, because it was felt that the accident was the most active and efficient cause which had acted in an unbroken and natural sequence of events which led to the death. So that is, in a nutshell, the principle of proximate cause.
Okay, sir. So basically, what you're saying that not only the time immediacy, but rather the efficacy of that event to bring about the change or bring about the loss is what matters most in case of proximate cause.
Yes, you are right.
So just to double click on this issue of proximate cause a bit more, sir, actually we see that in many a times there is not one but multiple causes that are coming into the picture. So can you please help us understand what are the principle behind determining this kind of situations?
The situation that you have alluded to is generally called concurrent causation, which incidentally finds no reference in the Marine Insurance Act. In my article on inherent vice and causation in the Insurance Journal, I have taken the definition of concurrent causation from an article in Alabama Law Review titled Confusion About Causation and Insurance, Solutions for Catastrophic Losses by Professor Eric S. Knudsen. In this article, Professor Knudsen says that, and I quote, in insurance law, concurrent causation occurs when a loss is brought about by two or more potential causes. The cause or causes of a loss dictate whether or not a person who has an insurance policy, that is an insured, has an insurance coverage for that specific loss. He also says that generally concurrent causes should be perceived as causes of equal or near equal efficiency in contribution to the loss. However, it does not mean that each of the causes can give rise to the loss independently. Rather, they are interdependent, wherein neither can bring about the outcome without the other. Unquote.
So basically, sir, if I try to visualize it, concurrent causation is more like a web form. And in our podcast, you said, sir, like judicial approaches shape the different interpretation of words and different interpretations of policy conditions. So what are the different judicial approaches as far as concurrent causes are concerned?
One of the problems in concurrent causation is that the judicial approaches followed by courts has not been uniform. In fact, Professor Knudsen has discussed the various approaches followed by courts to resolve this issue of concurrent causes. And though his discussion is mainly with reference to American courts, I felt that this is universally applicable to even India. So, if one looks at the three causes that Professor Knudsen has discussed in his article, the first one is that of the dominant cause approach, in which the court is required to choose a dominant or proximate cause from among a plethora of possible causes. The loss is admissible if the dominant cause is insured and not admissible if it is not. The dominant cause is taken to be the cause which had the greatest effect in bringing about the loss, or the one which is most responsible for the loss. This approach is the most common approach as it appears simple, decisive, and fair. However, as Professor Knudsen has also noted, this approach is riddled with inconsistencies, and different courts adopt different methods to choose the dominant cause. In fact, also Professor Knudsen has very aptly observed that dominance is often in the eye of the beholder.
Okay, sir.
The second approach is the conservative approach, in which if there are two concurrent causes and one cause is covered by the policy and the other excluded, the exclusion takes precedence and the loss is not covered. The classic example of this approach is the British case of Wayne Tank and Pump Company Limited versus Employers Liability Assurance Corporation Limited, 1974, in which a factory that used liquid wax suffered a fire which resulted from two possible causes. One, failure to install proper equipment, which was an excluded cause, and employee negligence, which was a covered cause. The English Appellate Court held that even if a dominant cause was determined, the exclusion cause was paramount and would prevail over the covered peril. The argument behind this approach is that the insurance can only pay for the risk it has accepted, and while underwriting, the exclusion is beyond the limits of coverage provided. And it is also to be noted that this approach feels that the coverage is not only given or accepted by the underwriter, but it is also agreed to by the insured, and therefore nothing beyond the coverage can be given by the underwriters and accepted by the insured. The third approach that we have to concurrent causation is the liberal approach, which is basically the reverse of the conservative approach. In this, among competing causes, if there is one covered cause, the loss becomes payable. In the British case of Miss JJ, faulty design and perils of the sea both contributed equally to the loss, and it was held that if an insured peril and an uncovered but not excluded peril both operate to cause a loss, the insured can recover. Accordingly, we know that according to this, or as per this approach, in marine cargo insurance, if loss or damage to a cargo occurs as a result of a peril which may be on all risk basis or which may be on a result of a named peril, if there is another concurrent proximate cause for the loss which is not covered, then the second cause, that is which is not mentioned, will not vitiate the cover provided under the policy. But if the second cause is expressly excluded, the exclusion must prevail and the loss is not paid. Okay. There is another approach called apportionment approach, where liability is determined as per cause. That is where it is possible to isolate the impact of each cause. This is very similar to the composite negligence principle in tort law, where liability is apportioned according to the fault of the tortfeasor. In summary, I can say that there are various contradictions and inconsistencies in the judicial interpretation of the principles governing concurrent causes, and a uniform, logical and equitable approach needs to evolve to this very important field or aspect of insurance jurisprudence.
So, extending this point, sir, I would now like to move on to another very important aspect, which is again something complex and not clear to everyone, and that is burden of proof. So, what is the burden of proof? And again, considering the established laws of land, can you please explain how the burden of proof operates in each case?
The British case of British and Foreign Marine Insurance versus Gaunt, 1921, I think best explains the principle behind the burden of proof in an insurance claim. This case finds a very important place in my article too. So if I quote from the judgment, it says, "We are of course to give effect to the rule that the plaintiff must establish his case, that he must show that the loss comes within the terms of his policies, but where all risks are covered by the policy and not merely risks of a specified class or classes, the plaintiff discharges his special onus when he has proved that the loss was caused by some event covered by the general expression, and he is not bound to go further and prove the exact nature of the accident or casualty which in fact occasioned the loss." The above judgment makes, or the above paragraph in the judgment makes the universally acknowledged principle clear that the onus is always on the insured to prove that the loss is an insured one. It is also an established principle that in the case of a named perils policy, where the perils covered are specifically named or laid down, the onus is on the insured to establish that the loss is caused by one of the named perils. However, in an all-risk policy, there is a difference in that the burden on the insured is less onerous, and he has to prove only that the loss is accidental in nature. He does not have the further onus of proving which peril exactly operated out of a multiplicity of perils to bring about the loss. It can be also further noted that once the insured discharges his burden of proof, it is upon the insurer to prove that the loss was caused by an excluded peril. This last principle is supported by the judgments of the Supreme Court of India in cases like Peacock Plywood Private Limited versus Oriental Insurance, and the very recent case where the judgment May 2023 judgment in National Insurance Company versus Vedic Resorts and Hotels Private Limited, which concerned a fire policy. Now it is also accepted that the standard of proof, because we have this concept along with the burden of proof, it is a part of the burden of proof. The standard of proof which is required in establishing an insurance claim is the civil law standard of balance of probability, and not the criminal one of beyond any reasonable doubt. This means simply that the occurrence of the event and the perils involved must appear more likely than not on the basis of evidence provided and the application of common sense.
Sir, now that we discussed the concepts of inherent vice, concurrent causation and burden of proof, now I would like to move to the two very significant British court judgments that you mentioned in your article. That is the case of the Maybank and the Sender Mopu case. And we understand that these are considered as landmark cases on their subjects. So can you please elaborate how the judicial interpretations in these cases change perspective that we are discussing?
Indeed, the judgments in these cases have triggered a lot of discussions, and hence it is definitely worth discussing them in detail here. Coming first to the Mayban case, that is the 2004 judgment in Mayban General Assurance versus Alstom Power Plants Limited, we can have a look at the facts of the case first. A large electrical transformer was shipped from Wales to Malaysia. When it arrived at the destination port, it was found to be damaged and needed extensive repairs. The voyage happened to be covered under a marine cargo policy incorporating Institute Cargo Clause A 1982 version on all risk basis, which contained the standard exclusion for inherent vice. When the insured claimed for damages to the transformer sustained during the transit, the insurers contended that the loss actually had resulted from the inherent inability of the transformer to withstand the ordinary incidents of carriage by sea. They therefore rejected the claim on the grounds of inherent vice, which was an exclusion under the policy. The matter went to court, and the judge found that though it was accepted by both parties that the immediate cause of the damage to the transformer was the violent action of the winds and the sea, it was still a question that what was the real or proximate cause of the loss. Quoting from the judgment will make the logic of the judge in this judgment very clear. He said that the action of the winds and the waves is of course an inevitable incident of any voyage and is therefore a hazard to which all the goods carried by sea are necessarily exposed. Goods tendered for shipment must therefore be capable of withstanding the forces that can ordinarily be expected to be encountered in the course of the voyage, and these may vary greatly depending on the route and the time of the year." Unquote. The judge actually held that the perils of the sea and inherent vice are to a large extent on the opposite sides of the same coin, and that the shipped goods must be capable of withstanding the forces that can ordinarily be expected to be encountered in the course of a proposed voyage. If the conditions encountered by the vessel were no more severe than could reasonably be expected, then the conclusion must be that the real cause of the loss was the inherent inability of the goods to withstand the ordinary incidents of the voyage. Or in other words, it is going to be regarded as inherent vice.
So, why this judgment is so significant, sir?
The significance of this Mayban judgment is that it introduces a new requirement for cargo, that is a seaworthiness condition. This seaworthiness condition is introduced because this is not supported by any judicial precedent, by the way. The seaworthiness requirement is in that any cargo, if you follow the Mayban test, has to be capable of withstanding the normal and expected sea conditions on the insured voyage. Interestingly, in the Sendo Mopu judgment, stating elaborately is the case of Global Process Systems versus Sarkat Takaful Malaysia. This case, which we have also referred to in your question, also involved the Mayban, reference to the Mayban judgment or the Mayban trial court judgment. It was held by the trial judge in this Sendo Mopu case that the proximate cause of the loss is inherent vice.
And that brings us to the very significant case of Sender Mapu. So, sir, if you can first outline the case facts and then explain the details.
Coming to the Sender Mopu case, Global Process Systems actually brought an oil rig called Sender Mopu and arranged to transport it from Texas to Malaysia on a towed barge with 3 massive tubular legs extending some 300 feet into the air. This rig had been insured under a policy which incorporated the Institute Cargo Clause 1982, covering all risks along with standard exclusions. Now, during this transit, the legs broke off one by one, and the insured claimed under the policy, contending that the loss was caused by the perils of the sea. But the insurers, on the other hand, repudiated the claim on the ground that the loss was caused by the inherent weaknesses of the legs, which constituted inherent vice. The critical question in this case was the real cause for the loss of the legs. There were two rival candidates to proximate causation in the case. Perils of the sea in the form of the stress put upon the rig by the waves encountered during the voyage, and the inherent vice of the subject matter insured. The trial court in the first instance rejected the argument of the insurers that the loss was the inevitable consequence of the voyage. It found that although probable, the loss was not inevitable, but it required a leg-breaking wave to cause the loss. However, going back to the Mayban test, the trial court ultimately concluded that the inherent vice was the proximate cause of loss because the legs were not capable of withstanding the normal incidents of the voyage, as this leg-breaking wave was part of the weather conditions reasonably to be expected. The Court of Appeal did not agree with this decision and concluded that the proximate cause of the loss in the form of a leg-breaking wave was an insured peril in the form of perils of the sea. The matter went to the Supreme Court, where ultimately the decision went in favor of the insured and against the insurance company.
And sir, the Supreme Court judgment in Sender Mapu case is rightly, as you said, considered as a landmark one in marine insurance law, and it is known to have set several judicial precedents on the issues concerning both inherent vice and rules of causation. So, if you can just give us the main takeaway from this very important judgment.
The main question in Sender Mapu was essentially one of causation. That is, whether the loss of the rig's legs was proximately caused by an inherent vice in the legs of the rigs, or by perils of the sea, or by these two causes in concurrency. The competing causes in this case were, on one side, the metal fatigue failure of the rig, which is the alleged inherent vice, and on the other side, the leg-breaking wave or the perils of the sea. Now, in determining the proximate cause of the loss, the Supreme Court recognized that it had to find the cause that was proximate in efficiency, and that to do so, they had to follow the test of the common sense of a business or seafaring man as expressed in Norton versus Harding, the 1990 case. Now, therefore, the Supreme Court went on to clarify the meaning and extent of these two rival concepts, that is, perils of the sea and inherent vice, in order to determine the true proximate cause. In Rule 7 of the Schedule of the Marine Insurance Act, perils of the sea are defined as fortuitous accidents or casualties of the sea, not including the ordinary actions of the winds and the waves. The Supreme Court therefore concluded that since the word ordinary precedes and attaches to the word action and not to winds and waves, therefore the action of the winds and waves has to be extraordinary and cause a loss, and not the weather conditions. That is, the extraordinariness should attach to the action and not to the weather conditions in order to trigger a claim under the policy. In this respect, the Supreme Court actually endorsed the decision in J.J. Lloyd Instruments Limited versus Northern Star Insurance Company Limited, which is famously known as the Miss J.J. case, and made it clear that perils of the sea are not confined to exceptional weather conditions that cannot be foreseen. What is to be looked into actually is whether there existed an extraordinary effect of the winds and the waves, that is, extraordinary action, not whether there has been extraordinary conditions of the weather, that is, extraordinary wind and waves. A defense against perils of the sea based on normal, ordinary or foreseeable conditions of the weather as postulated under the Mayban judgment is no longer valid. The Supreme Court rejected the seaworthiness of cargo test implied in the Mayban judgment because this would be against the specific provisions of the Marine Insurance Act, that is section 41 of UK Marine Insurance Act, which corresponds to section 42(1) of the Indian Marine Insurance Act. The Supreme Court further held that if such a requirement was held valid, it would defeat the purpose of an all-risk policy, as the cover would then be restricted to losses arising out of exceptional events only. It clarified that the perils of the sea included external fortuities which were unexceptional or which were foreseen or foreseeable. With regard to inherent vice, the Supreme Court went back to the definition in Soa versus White and expressed the view that inevitability was not the test of inherent vice, and even when the damage was foreseeable due to inherent characteristics of the goods, it is inherent vice only when the damage is caused solely by the natural behavior of the goods without the intervention of any fortuitous accident or casualty.
So, if I understand it correctly, sir, the central issue in Sendermapu case was about the causation.
Correct.
Okay. So, has the Sendermapu now has given us a new approach or in any way changed the established approach to causation and more particularly concurrent causation?
There were certainly a few fresh interpretations or reinterpretations of old concepts in the Sendermapu judgment. First of all, as we have seen earlier, the Supreme Court endorsed the definitions of perils of the sea and inherent vice given in two earlier judgments, namely the one in the Miss JJ case and the Soya versus White definition in inherent vice. And further, where this judgment really breaks new ground is in the matter of interplay of two competing causes, inherent vice and perils of the sea. The Supreme Court significantly notes that in situations involving the concurrent causes of perils of the sea and inherent vice, is going to introduce a weighing exercise of grading the weather conditions in order to find out the dominant cause of the loss. Such an exercise is going to be very difficult because it would be very uncertain. It would give a very uncertain outcome and definitely not a very accurate one. In consequence, their lordships preferred a very simple analysis, stating that perils of the sea and inherent vice cannot stand together as equal dominant causes, since the impact of the perils of the sea is so difficult to measure against the impact of a potential inherent vice. That means that for inherent vice exclusion to take effect, inherent vice has to be the sole cause of the loss. If it is not the sole cause, the policy has to pay. As a result, in the Sendermapu case, the leg-breaking wave was enough to dismiss the concurrency argument. Another takeaway from the Supreme Court judgment is that the lordships in their respective judgments maintained that the exclusion of inherent vice by section 55(2) of the UK 1906 Act, which is the same as the section 55(2) of our Marine Insurance Act 63, is not an exclusion at all, but merely an amplification of the proximate cause rule, and thus an example of a circumstance of a loss not caused by a peril insured. It is to be seen as a limitation of the scope of cover, and the exclusion clause 4.4 in the insurance contract ought not to make a difference to its status under section 55(2) as an uninsured peril. The implication is this, that it makes this as an unnamed risk in the risks covered clause of a named perils policy. Even though it is an all risk policy, the implication of this principle or of this hypothesis is that inherent vice becomes one of the unnamed perils, uncovered perils in the risk covered clause of a named perils policy like ICCB or ICCC. This will give rise to a situation where the Wayne tank principle of exclusion in a of the Wayne-Tang principle, which says that when there are two concurrent causes, one insured and the other one excluded, the exclusion clause will prevail. This will not apply in this particular case where one cause is an inherent vice and the other an external fortuitous cause, because inherent vice is not to be taken as an exclusion at all, but rather as a limitation to the scope of cover, or as a loss which is not proximately insured against. So this is a very important takeaway from this.
So sir,
judgment.
is the final jury about inherent vice and causation in, or is it still out? What I mean, are there any further possibilities of any other judicial interpretation of these two very crucial aspects, or we have the final verdict in our hand that the underwriters and claim settlers can use as reference?
In law, one can really rarely say that the final word has been said, because law is constantly evolving and a dynamic subject, and reinterpretations and fresh interpretations by courts are definitely possible even in this subject. Further, this judgment, that is the Sender Mopu judgment, does throw up some interesting questions which are unanswered still. For example, whether this mutual exclusivity of inherent vice with external clauses is also going to be applicable when the rival causes are, for example, insufficient packing and perils of the sea. Further, one can ask what would be the position in the case of inland transit, where the external fortuity is claimed to be jerks and doles during road transit, whether inherent vice exclusion can apply in such a situation.
So basically it appears from what you're saying that it is the end of the road for inherent vice as an exclusion, as the current judicial position makes it extremely difficult for the underwriters to reject a claim based on this exclusion. Will you agree to that, sir?
I would definitely agree that it does make the position difficult for the underwriters, though not impossible. Historically, we have seen that underwriters have responded to court judgments by changing or revising the wordings of their policies. The very well-known example that comes to mind is the Inc. Marry clause in Hell and Machinery policies, which was introduced to provide cover for a variety of risks that were not initially covered as perils of the sea. This was in response to the legal action brought by the owners of a ship named Inc. Marry in 1887. The case was actually Thames and Mersey Marine Insurance Company versus Hamilton Fraser and Company. We also can refer to the recent modification of the wordings of the war clauses in cyber policies that you have brought to my notice in response to a court judgment in the state of New Jersey. So in India, we have seen that exclusion clauses are viewed by courts with a different and rather suspicious perspective. Recently, the Supreme Court, in a judgment delivered on 9th November 2022, the case being that of Texco Marketing versus Tata AIG, said that the insurance contracts are to be regarded as adhesion contracts. That is, where the insurer is the dominant party and the insured has little say in deciding the terms. In such contracts, the Supreme Court has held that the doctrine of blue pencil can be applied, whereby an exclusion clause which defeats the main purpose of the contract could be scratched out or deleted without affecting the enforceability of the remainder of the contract or the remainder of the policy. Even under this present law, however, we can say that if an exclusion clause is drafted in clear and unambiguous language, the courts can do nothing but enforce them, because there is no rule of law that disallows a party from excluding liability to any extent. We can refer to the observations of the Supreme Court, UK Supreme Court, that is in 2016, in a very important case of Impact Findings Solutions Limited versus AIG Europe Insurance Limited, where it stated that the words of exception or exemption must be read in the context of the contract as a whole and with due regard to its purpose. As a matter of general principle, it is well established that if one party, otherwise liable, wishes to exclude or limit his liability on the other party, he must do so in clear words, and the contract should be given the meaning it would convey to a reasonable person having all the background knowledge which is reasonably available to the persons or class of persons to whom the document is addressed. Words of exception may be simply a way of delineating the scope of the primary obligation. From this, one can say that inherent vice exclusion wordings can be redrafted in more clear and unambiguous terms to enable it to serve its purpose as an exclusion and not as a mere limitation of the cover. Unless there is any revision or rethinking on the traditional wordings, I am afraid that this narrow interpretation of inherent vice that is continuing to prevail now will hold fort.
So in a way, I would say, sir, the court is asking us to go back to our roots, that is the policy wording itself, and asking us, the underwriter, to make it very clear to the insured what we are covering and what we are not, so that there is no ambiguity to either of the party.
Yes, and unless we do this, we have the only other option or the other resort for underwriters is to increase the premium, as inherent vice is going to result in more and more claims.
So with this, we have reached the end of today's podcast, and we discussed what is inherent vice, its relation with inevitability. We also discussed the proximate cause and concurrent causation, and got a very nuanced review of the case of Sundar Mapu and understood its significance. Thank you all for listening, and a big thanks to Basudev sir for explaining all this critical concept.
It's been my pleasure, and hope to continue this series with a few more issues and concepts. Thank you very much for the opportunity.
We certainly enjoyed making this podcast and hope you enjoyed listening to it and gained some great insights. Also, please do share your feedback, as it is critical in shaping our future episodes. We will be back again dissecting some other aspects of insurance. Till then, take care and continue dissecting whatever makes you curious. Once again, thank you for listening and goodbye.